let's start it. You know, as everyone knows, this week hasn't been too crazy on the Forex market, except for the Japanese yen, as we had some good opportunities popping up on, for instance, Aussie dollar as well as euro dollar. Of course, USD JPY. So there's all of those currency pairs that did had some of a move, and definitely could make us, some good trades. Now, in terms of economic calendar perspective, we don't have pretty much anything happening. All right, so let me show you all this week. So on Monday, we didn't have much except for the final PMIs for Italy, France, Germany, and Euro area for the services, okay, in Australia. And that was all as expected, so no changes. And UK, of course. After that, we had the USA Services PMI final as well, bit lower than expected. On Tuesday, we didn't have much as well, except for the Euro retail sales that came in lower than expected at negative 0.3 from the expectation of negative 0.1. As well as Australian RBA Interest Rate Decision, of course, that was, in somehow hawkish, just because I've made a video on that. So if you haven't yet watched the video on the channel, it's this one here. Let me show you. There you go. The truth behind RBA press conference. Rate hike is still on table. So yes, the rate hike is still on table. We can have a look here on RBA. Oopsie, not this one. RBA rate statement. What's going on? My internet's not that fast today. Interesting. Monetary policy decision from 6th of August. Inflation remains above target and is proving persistent. All right. This is not good because they have hiked the interest rates to 4.25 to 450. 435 to 455, 65, around that range, and it hasn't yet been seen an effect on the market. The market hasn't felt anything yet. So inflation has fallen substantially since peak in 2022. Yes, I think the peak was 8%, 8 point somewhere, as higher interest rates have been working to bring aggregate demand supply closer towards balance. As I always say, I've been saying this to everyone. When we have the interest rates, all right, the IR, or simply the R, but it's a different R. It's go like something like that. All right, this is the R for interest rates. So when we have the R higher, okay, when we start to put the interest rates up like that, there are a halfway. All right, there is a halfway mark. Okay, let me change the color now to a, let's say, dark blue. There's a halfway point that the interest rates is. That's exactly this one. Okay, let me change the color again. This halfway point here is the point that we'll be working to bring the inflation down. All right. So what happens with the inflation is that inflation in Australia was around 8%, and the curve that we have is somewhat around these levels at the moment. Okay, and the inflation has to be under here. So from here, there was on 8% inflation to here, where we are now, it's 4% inflation. Right? We are a little bit below. We are somewhere around here, 3.9. We are somewhere around here, but still 4%. So the inflation has to come down here. All right. So what I want to explain with this is, yes, when we don't have any hike on the interest rates, inflation tends to go pretty quick, pretty quick, as we've seen with Australia. When the interest rates is some way like halfway through the what the central bank has proposed, this will start to make sense and inflation will start to decrease bit by bit. Now, when the interest rates has reached the peak, as you know, as the interest rates, as the central bank think it is the peak, because we never know when it's going to be, how much it's going to be, and what period of time they will stop or cut or whatever, because it's too, the economic wise is too broad, and it's a very natural, it's like a nature. Okay, it has changes, it goes through changes pretty quick, economy. So what I have been noticing from the past 4 or 5 years is that every time we have a peak that we know that we can feel it, that it's a peak on the interest rates, inflation starts to decrease halfway. Once decrease halfway, most important thing to observe that we are having to observe right now is how this inflation is persisting when we have a interest rates at the peak, all right, in this case 4.35, but we don't know if it's the peak or not. But anyways, because now they say that is, maybe they will be continuing to hike in interest rates if needed. So when we have the interest rates at the peak, we need to understand now if inflation continues to persist, or if this inflation is slowly going down but still going down, or if it's persistent, if it's a sticky inflation. Right? Some of the economists say, oh, this is a sticky inflation. For those who don't know what sticky inflation is, basically is used to dominate a persistent inflation, right? Denominate a persistent inflation, sticky inflation. All right. So with that being said, now it comes the truth. I do think that most probably they will have to hike another 25 basis point, so they can bring the inflation continuously lower to the target of 2%. All right, so you still have 1.9%, so you still have 2% to bring the inflation down. Now, why is it so easy to bring from 8 to 4, but is it so hard to bring to 4 to 2? Right. This is my question for you guys. So I want to know if you know, why is it so hard to bring inflation from 4 to 2, but it's not hard to bring inflation from 8 to 4? If you have any clue, just type it in. Don't be shy. Don't, sometimes we do get things wrong, but that's the way we learn. Otherwise, if you don't know, that's not a problem as well. And, in the meantime, we'll just drink some water. All right. Interesting. So no one actually have tried to answer this question. I know it seems like a bit of a complex question, but it's in essence, it's not. Come here, Nathan. Nathan knows the answer. Nathan will answer to us. The camera is just here. Let me take this thing off from the video. So, oh, there you are. Cool.
Lucky I didn't turn around. I would have looked like one of those Olympic beach volleyball players.
Yeah, true.
I think it's like belly fat, right? Like you can lose weight, But it's that last bit. I don't want to lift up my shirt too much here, but you know, you do well, and then you just realize you can't get the six pack, can you? It's
Yeah,
hard
exactly.
to get that last
Exactly. That's exactly it.
bit.
So, yeah, good one, Nathan. That's exactly what it means. So, so when you have the inflation at 8%, this is inflatable. All right, it's something that it's too much, and it will be very easy to bring down to the real inflation. The real inflation it's 4%, but it's not 8%. All right, do you guys get it? So it's easy to bring inflation down, but now the real inflation that is actually sticky around, that it's on the prices, it's on the consumer, is the hardest point to bring down, because it's the real thing. All right, it's not the belly fat anymore. Now you're trying to build the six pack, as Nathan was saying. So, and this is the hardest part. All right, most of you probably maybe go to the gym or exercise often or anything like that. So in a sense, very hard, okay, but doable. Of course, it's doable. We can see UK bring inflation from 11% to 2%. We can see USA bringing inflation from 7 to now 3, and it goes from there. All right. So, for them to now, the other point is, if we go through the actual summary of the statement here, we can see that the outlook, the real inflation now is 4%. The 8 was the reaction to increase. Okay, so the real inflation now is 4%. That's correct. The 8 was the reaction to the increase, not the reaction to the increase, but the reaction of not increasing. All right. And then when it increases, then it drop down pretty quick. But then when it gets to the thing that it's sticky, we know that that's the real inflation. And on to the inflation, the 8 was the reaction to the inflation. Sorry, now it's confusing. So the real inflation now is 4%. Yes, the 8 was the reaction to the inflation. Yes, that's correct. That's correct. Now it makes sense. All right. So if we scroll down here, that they say the outlook remains highly uncertain. Yeah, of course. But what I want to read to you guys is, the board will rely upon the data and involving assessment of risks to guide decisions. In doing so, it will continue to pay close attention to developments in the global economy and financial markets, trends in domestic demand and outlook for inflation and labor demand. The board remains resolute in its determination to return inflation to target, and will do what is necessary to achieve that outcome. All right, so that means that they are somewhat hawkish. And then they say here that the policy will need to be sufficiently restrictive until the board is confident that inflation is moving sustainably towards the target range. That I have interested to need. Okay, data have reinforced the need to remain vigilant to upside risks to inflation, and board is not ruling anything in or out. All right. So in terms of these, yes, they're pretty neutral to hawkish. All right. If they were a little bit more hawkish on here, we could be able to see where is the charts? There we go. Let me put Australian dollar here. So if you look here, right, this was the reaction to someone is bringing food to me. Yeah. Thank you. All right. Yeah, I eat pretty much everything, so everyone brings me food. All right. All right, so we can see here that this is the reaction to the interest rates decision. But then just after that, we can see that from a few hours later, 4 hours later, we've had this move, and then we have a big green candle here, and that there was a continuation, And then there was, you know, forming this uptrend continuation here. So in my opinion, we are downtrending on the Australian dollar, of course, because we can just zoom out and we can see this. But my target got hit. All right, I was looking to target 64, and my target got hit. But in a broader picture, I don't believe on Australian dollar going up from here. All right, I still believe that we can continue come down somewhere around these levels, right? Come back to here. Yes, maybe we can test these resistance, and then from there come back lower. This is my opinion on Australian dollar. All right, it's not a trade idea or anything. It's just like a small idea that I was looking to it for a few days already. Now, moving ahead, we had German factory orders and then nothing else until imports and exports from Japan, from US, and then the Canada balance of trade June. That came in much positive and that they were out of the negative. All right, so very good for the balance of payments, the balance of trade here for Canada, and most probably made the Canadian dollar a bit stronger for a few hours. Yesterday we've had China balance of trade as well, but that was pretty bad. And we had German balance of trade as well, bad as well. And then today we literally don't have anything. And then tomorrow we have German inflation rate, month over month and year over year. All right. All right, so far so good, guys. No questions or anything? Okay, good. All right, perfect. Do you guys have any questions? Yeah, none? Okay, perfect. Good. All right. So let's go to some pairs. Let's go euro dollar. All right. Tricky. All right. What I can do today, just because it's a bit of a very slow week and we don't have much to talk on the Forex market. We can have a look at the next week economic calendar already. And from there, we know what can we trade already from this week, all right? What sort of positions we can take. All right, Monday, nothing. All right, maybe it comes something, maybe it changes. All right. Tuesday, I'm talking about next week, guys. Just make sure here, right? So Tuesday, 13th of August, next Monday, that's next Tuesday, we will have the United Kingdom, pretty much the employment change and the unemployment rate, and that will be very important, right? Consumer confidence for Australia, and PPI for USA, month over month, and what else is? Oh yeah, Euro area and Germany ZEAL economic sentiment. Now, the most important ones from here is, of course, the consumer confidence change in Australia to trade the Australian dollar. The United Kingdom in unemployment rate, okay, if it's decreasing, if it's increasing. German ZEAL economic sentiment and United States PPI, producer price index, right? So we have the CPI. Let me just note it down for you all. So we have the CPI that I think the majority here knows what it is. CPI is the consumer price index. All right, consumer price index. And the PPI is the producer price index. All right, price index. Sorry, my P's are not that good. All right, producer price index. Now, does anyone here know the difference between the producer price index and the consumer price index? Nathan, don't answer it. Let them answer it. All right, if you guys know, let me know. I'm just gonna have a bite here on this beautiful sandwich right now. Yeah. Uh, Nathan is telling the answer. All right, we have one answer. That is, the CPI is the buying power of citizens. Yes and no. You very close, very close. All right. So the CPI is the consumer price index. So it measures the inflation for the consumers. All right. How is that done? Is through a basket of goods. So so we have a basket. All right. You know, when you go to the supermarket, you have your basket. You put your goods in there: milk, bread, whatever you eat, that everyone eats the same, like in terms of category, right? Not the same products, but in terms of same categories, like bread, milk, and rice, beans, and so on. And then we have all the sources of basket that is considered a human needed to live, something around these lines. All right. And then they make they make the maths, and the maths is pretty simple. They sum everything, divided by everything, and then you get a number. And then from this number, you get the producer, the CPI, the consumer price index, and then you change, and then you see the change from the last month or last year to this year or next year. And then you will notice the inflation, how much the percentage of this inflation have been affecting the market. This is for the consumers. This is for the final person on the chain, the person that will actually utilize the item, will buy and eat, or will buy and plant, or will buy and use that for personal use. Now, for the PPIs, the producer price index is exactly the same thing, but for the producer. But it's the basket is with raw materials. All right, so wood, gasoline, prices on electricity, and so on. This is how the PPI is measured, and it measures the inflation for that producer to produce certain. Let me say, let's have a look. This pen, right? Pencil pen here. We have plastic, and then we have this little other, maybe this is a crystal plastic, then this blue plastic, this other blue plastic. The point here is a little metal, and then a ball, and then this, I don't know what material it is, and then plastic tube, and then fill it up with paint. So this is the materials to build it up a pen. All right. From there, the material was costing 5 cents, 1 cent, and now it's costing 1/5 more expensive. All right, so 2 cents, 2.5 cents, let's say. This is inflation. All right, so the producer will have to put together on the final price to sell for the supplier, and then the supplier will put it up the inflation that he has as well on prices, and then we'll put it up to you. So this is how inflation works in the modern world. Very, very interesting, right? So we're going to have the PPI for USA, and that will measure the inflation for the producers. Now, if we look to inflation on the USA right now, the CPI have been decreasing, and that does have a correlation with the PPI. If the CPI decreases, then the Fed will wait for the PPI to see if the PPI has been decreased as well. All right. If the PPI has been decreased, then it's a good sign, and we are on the right track. Going ahead, we're going to have on Wednesday inflation rate for UK, and is expected, don't have expectation yet, the previous 2%. And then we have inflation rate for France. We have GDP growth for Europe, expected to maintain the same quarter-over-quarter, but year-over-year is expected to increase a little bit. Employment change as well. And most important, the CPI for USA, 10:30 on Wednesday, Australian time, okay? This will be crucial. I mean, crucial, but I do expect this inflation to come lower, all right? I do expect this inflation to come lower because things now on an economy, we have everything as a little engine, all right? Everything needs to be working together to maintain a certain stability. Otherwise, it's too crazy. Okay, but the NFP last Friday came in much weaker than expected. The average hourly earnings came in very bad. Unemployment rate has been raising. Right. So with those three items that we have right now, we can predict already that there is less money being spent on the economy, at least on a month-over-month. Okay, especially for the month of July. So if we have this, this crucial sense of thinking that yes, there is less people spending on the economy, and how is inflation generated? Through spending on the economy. So if there is less people, there is probably less inflation as well, right? We don't always have we always don't have all of the same model function, but in theory, this is how the model should work. Okay, so you can build a model on top of that if you like. I just use my head. Sometimes some people use Excel spreadsheets and so on. But yeah, so most probably we're gonna have a lower inflation. That's my opinion. All right, moving ahead on Thursday, we have Japan GDP, all right, so very important. Just as they hiked 25 basis points last week, we have now the GDP growth rate quarter-over-quarter expected to be much better and get out of the negative territory. Same goes for the annualized get out from the negative 2.0 to positive 2.1%. So both of them are pretty good. China retail sales, very good. United Kingdom GDP, yes, is expected to have a bit of a contraction in there, month-over-month, and then the year-over-year is expected to have a growth, and the quarter-over-quarter is expected to have a contraction as well. And then we have retail sales for the month-over-month of July for USA, and is expected to be negative. Yes, of course, is expected to be negative because we had such a bad NFP, such a bad numbers on unemployment rate and average hourly earnings that people are not working. People therefore are not making money. People therefore are not buying products, and plus people are not buying anything because there's no commemorative dates. All right. So most probably we will see a very bad retail sales for the USA, okay? Moving ahead on Friday, we have retail sales then for UK. And what else? This is it, right? So this is going to be the main things for next week. Let me have a look here. Yeah, core inflation on Wednesday, and inflation rate, of course. German zero economic, United States PPI, United Kingdom unemployment rate, confidence, China, GDP for Japan, United States retail sales on Thursday, and then on Friday, building permits. But these two, this one is not that important to Forex, and then United Kingdom retail sales is pretty good. All right. So, yeah, this is how it's gonna be next week. Any questions around that? No questions. All right. Okay, no questions, no questions. All right. So now, based on this idea, what are we predicting? Well, I'm predicting a higher euro and a lower US dollar. So let's trade euro dollar for next week. How would I approach the market, right? How would I approach the market next week? Look, we do have some interesting points here on euro dollar. Definitely we do. So let's just start to build some of some of our context here. So we will expect weak dollar. Yeah, exactly. So I'm expecting a weak dollar. So for a perspective of fundamental wise, we've done the whole context thing, which is pretty easy. Now in terms of a technical view here, what do we got is pretty interesting. Okay, so we've broke through this higher point of the trend. Okay, let me just delete those ones now. We've broke through this higher point of the trend. This is our lowest point now, and now this is our highest point. Previous was the one just below, just here, but it's not anymore. So this is the range we have for the market at right now. In terms of identifying it, yes, we've identified this. It's pretty easy to see. How could I and how would I expect a pullback of these, and so we can long the trade? Well, there's some ways you can use Fibonacci tools, of course. Let me just take off some of these because we don't need all of these. Extend. Done. Right, so these are the levels that I'm looking. Let's zoom in now. You don't have to be perfect, right? So good. Okay. So between these three levels, 38, 50, and 61, which one should I look to be more precise? Well, I think that from here to here, it's a very good level already. Okay. So this is pretty much my setup for the next week trading. We'll be waiting for euro dollar to come back somewhere around this area and bounce back to up here on this level. Now, if, right, pay attention on that. If we look at the euro dollar coming to this area here from today or tomorrow, then this trade is invalid, right? We just come back here. Right, so if the market comes to this level here today or tomorrow, all right, so if it does like that, then this trade is invalid, all right? If it goes here and then it comes back down here, it's invalid, all right? So we need the market to break through this sort of trend line that I don't really call this a trend line, to be honest with you. Sorry. Let me use a proper tool. Okay. So this is the trend line that I'm talking about, that I don't look much at these things, but anyways, so if we get down to somewhere at these levels here, okay, to here, then yes, it's possible to work around this trade, but otherwise, no. If the market comes back to here, no, it's already invalid, and I'm not looking to trade at this area. My point of, that I'm looking to trade is here or nothing. All right. So this is pretty much my ideas for next week on the euro dollar. And this is the only pair I will be trading for next week. Okay. So let's see how the market will open on next Monday. Now, does anyone have a question, or can we finish? All right then, no questions, guys. Thank you so much for coming today. Not a busy market, so not much to talk about. Not opportunities presenting themselves, so we don't need to trade because there's, we don't need to trade all the pairs because there's nothing happening. No, these are the times that you have to sit down, relax, and wait. Right, we've just had a really huge moves happening on Monday and Friday, last Friday and this Monday. So give it a time. Traders will be taking profits and the market will be going slower. So just chill for now. All right. Okay, guys, have a great weekend ahead, and I see you on Monday on the video, or I see you on Tuesday on the webinar from 5 to 6 p.m. on Australia time. All right, guys, see you. Bye-bye.